All right, good afternoon, everyone. Welcome to today's webinar event. Well, my computer says it's a couple minutes to 2, but my portable device tells me that it is promptly 2 p.m. Eastern Time, almost 1 minute after. So we're going to kind of split the difference here and going to go ahead and get started. Hopefully everybody can hear me okay. We're here to talk about the using journal entry transactions in Church Windows accounting today. But before we get started on our topic at hand, just a couple technical, logistical things before we get started. For those of you that have heard this, please bear with me. If you have a single monitor set up, you can click the little red arrow at the top of your control panel there to minimize that control panel. It'll get it out of the way for you. Or if you've got a dual monitor set up, just drag it out to your second desktop just to get it out of the way so you can get the full visual presentation of the webinar event. We are working with, let me introduce my highlighter now. We're working with version 1916 of Church Windows here. Everybody should be able to see my arrow here. That is the latest and current version of Church Windows. Everyone who's on support should have received a CD with that, or not a CD, an email, with the link to that file. And we're sending out a second round of those to folks who our records are indicating never opened the original email that we sent. If you don't have that, please check your spam folder or your junk email just to make sure that you didn't receive something from us either today, tomorrow, or a couple of weeks ago right around the Labor Day holiday. Also, just finally, before we get started on our topic, it's just me today. If you have questions, please type those into the questions portion of the control panel. I will do my best to keep an eye on those, but again, I may not be able to get to your question until the very end of the webinar. If you have time and you can stick around, by all means, I'll do my best to answer those questions for everybody who has them. But again, we please ask that you do keep the questions topical, meaning on our journal entry transactions today. I'm not equipped either in my data or necessarily in my thinking to answer other questions you have about it. Again, our support staff are available, 800-533-5227, and please let us know. I'm going to just show you, for those of you who have not been there before, if we go to youtube.com/Church Windows, we've got all kinds of movies and recordings of our webinar events already out here on our YouTube channel. We're reworking these and reorganizing them, but just be aware, these movies and videos and recordings of past webinar events are here 24/7, generally, again, 20 to 25 minutes in length. Okay? Please check it out. We're very pleased with this and the response that users have had. All right, so let's get into our topic. So the journal entry transaction we're working with, it can be found in our Church Windows Training Workbook A202, pages 2 to 8. Okay, so if you have the Church Windows Accounting webinar or Church Windows workbooks, you can find this in A202, pages 2 through 8. If you don't have the workbooks, by all means, you can go online and purchase those from our website, our store. They work really nicely in conjunction with these webinar events where the topics are suitable. So, journal entries. Journal entries, they're really kind of an older form of bookkeeping or accounting in the sense that a journal entry was basically a transaction that affected two accounts. It didn't really matter what accounts were involved in the transaction. Very basically, accountants, who've been around a long time know probably that journal entries were basically all that made up the general ledger in many cases, in most cases on your general ledger. Now that we've got accounting systems like Church Windows, we have specific transaction types. We have the ability to record those. Specific transactions, donations, or income, or bills, or payments, or things like that. And therefore, the journal entry transactions, generally, the need for them is generally fewer and far in between. So how we explain it in the book is, well, first of all, we go up to transactions in the top left, and we go up to our other menu up here at the top there. Everybody should see my drop-down menu. Under other, we've got our enter spoiled check, we've got our adjust asset, which is also a journal entry too, by the way. Our payroll journal entry or manual entry or from a payroll service. We're not going to really speak about that today. And then we've got our general journal entry transaction, which is what we are going to work with today. But just an FYI, an adjust asset entry that we see here, I'm going to go ahead and click on that. That's not found in this section of the workbook. Basically, it is a journal entry transaction recorded as such in the general ledger, but one of the accounts that's involved in the transaction, whether it's the debit side of the entry or the credit side of the transaction, is one of our assets. Basically, we're affecting raising or lowering both sides of our balance sheet equally. That's one of the difference, but it's still recorded in the books as a journal entry transaction. Okay. In the case of our other journal entry transaction that we are going to talk about here in detail, it doesn't have to be an asset. It could be, as we're going to describe here in our example, it's going to be a transaction that involves income and expense accounts only. Okay, so nothing is changing or increasing or decreasing either side of our balance sheet there. It's just basically moving money from one account to another. Okay, a just asset is a journal entry where one of the accounts involved in the entry is always an asset. Okay. Let's go back up to journal entry transaction. Journal entry transaction, from our design concept or perspective in the software, was really designed to move money between unlike accounts. If we want to move money between like accounts, we're generally going to use our transfer transaction. We're not going to talk about that today. Transfers, however, involve like accounts, asset to asset, liability to liability, fund to fund, etc. Okay? It's strictly, that's how it works for transfers. Now, I can post a journal entry between like accounts too, but the most common use that we see as the company that produces Church Windows, the software program, is that journal entries are used to move money between like accounts. Okay. In a journal entry, as we notice here, we've got balanced debits and credits. So right here, we've got our debit amount column and our credit amount column, and our totals in the middle must be balanced. If I don't have a balanced totals at the bottom, it's not going to let me post the entry. This is a balanced dual debit and credit accounting system, fund accounting system. Let me add the word fund in there. It is important. So again, if the totals, debits, and credits don't equal, there's no way that the system is ever going to allow me to post the journal entry transaction. Okay. One of the things that we're not seeing able to see on the page is that in our workbook it does show us the effects of debits and credits on our accounts. Okay, this is important because you need to know what accounts to affect in your journal entry transaction. I mean, that's true about any transaction in Church Windows, but particularly in the cases of journal entries. Okay, in the cases of debits and credits, this really offers a lot of confusion for a lot of folks who are not familiar with balanced dual debit and credit entry accounting systems like Church Windows, where a debit to an expense or an asset raises its balance and a credit to an expense or an asset lowers its balance. Okay, and for liabilities, fund balance, and income, the opposite is true. A debit lowers those accounts and a credit raises those account balances. So a lot of times, it's really, you got to stick with it to understand how those debits and credits work. But in essence, that's what that screenshot on our workbook shows. It shows the account type, its debit or credit, and the effect that it has on the account, increase or decrease. But again, in the journal entry transaction, you have to know what accounts to affect. Church Windows does not. All right, so in our example that we're going to use on our webinar today, we're going to say we're going to do this as of today. We received a $1,000 gift back in March of this year to purchase kitchen equipment for making noodles at the church in the kitchen, and so that was put temporarily into an income account linked to our building fund, and we're now ready to move that over to offset the expense when we purchased our noodle making machine. Okay, so the only way we can do that is we're going to be debiting income and crediting an expense, and the only transaction type in Church Windows that will permit us to do that is our journal entry transaction. So just by way of an example to show you what I mean by that is, if I go to my Manage Accounts in my view and I type in my miscellaneous other income and I click on my balance tab, right here $1,000 in March was my gift towards noodle making, and we have now just purchased that equipment and we're just going to move that over to wash out that expense. So now if I go up and I type in my noodle, and there's my noodle making equipment, I've purchased it here in May, and it's $864.37, and I'm now going to clear that out of that account and get that to zero. We had received the gift for it. It doesn't necessarily need to show up as an expense on our treasurer's report, so we're going to clear that out. Okay? So here, now the only way to do this, no other transaction type will do it. We're going to do this as of September, and we're going to choose our miscellaneous income, and we're going to show our running balance window here just because it does help to. So we're going to debit our miscellaneous income by $864.37, and we're going to click the plus sign on the right end of the line or tab down, and here we're going to put our noodle making equipment expense. So notice I'm just typing in those account numbers. We're going to credit that. Again, a credit to an expense reduces its balance. So we're going to type in the same $864.37. But if notice here, if I even make 1 penny difference on that and I click Done Add to Batch, notice I get my floating red dot there that says total debits must equal total credits. A lot of folks are unaware that if you click on those little red dots or hover over them, it'll pop up with a floating help message, frequently telling you what's wrong. So I need to revisit this. So, oops, my total debits and credits are wrong indeed. So I would now come up here and I would go, it's 37, not 39. $864.37, and I would come down here, $864.37, and I could put in a comment if I wish. Now it will allow me to click Done Add to Batch. So now if we click on Show Running Balance here, notice that it does show a reduction of my other miscellaneous income up here and a reduction in my total noodle making equipment. So the adjusted balance on my noodle making equipment expense is indeed zero. Okay? For those of you that are not having some trouble seeing this, right here in the upper right, noodle making current balance $864.37, transaction effect debit $864.37, adjusted account balance is zero, which is exactly what I'm wanting. Okay? So just be aware that this is the only way that I could post or make this transaction to affect these two accounts the way that I have. Okay. Another common example would be a common use of a journal entry is, say, we're recording or moving our prepaid pledges that we have from our previous year. So let's see if I've got a prepaid pledge balance here. I think I do. Prepaid pledges. It's a liability to account. So now when I click the balance tab, nope, it's been cleared out. But let's, see it's right here. It shows $350. There was a beginning balance. So that beginning balance was brought forward. So right here, the only way is that I could clear out that $350 balance would be if I posted a journal entry to debit my prepaid pledge liability for that amount and a credit over to my income or my whatever income account I'm wanting to have that amount show for prepaid pledges on my current year's treasurer's report. Okay, probably what is my income account that I'm looking here for here? General tithes and offerings, $350. So that, again, a journal entry is the only transaction I could use to post a debit to the liability for prepaid pledges and credit it over to income or a fund or whatever account I wanted to credit. Okay? So just be aware, folks, these journal entries are rare, but they are important from time to time. Okay, so there's nothing terribly complicated about journal entries in most cases, but I do like to advise that you exert some caution around them, because it's possible journal entries again can involve any account, and so it's easier to make mistakes. So you could get your debits and credits inverted. You could post to the wrong account. It's why I'm awfully fond of the adjust asset transaction, where I need to make adjustments that involve my cash accounts, is because it forces me to choose one of my asset accounts when posting an adjust asset entry. Okay. In this case, I could get it wrong, and it particularly, that's why again I generally steer folks to other types of transactions, if at all possible, and resort to a journal entry if simply there's no other choice. Okay. All right, looks like we got a couple questions popping in here. Why wouldn't it have posted as if you were paying a bill. Well, I think Victoria, don't confuse the purchase that I made to purchase my noodle making equipment, if I'm understanding your question correctly, with me wanting to clear that off my treasurer's report as an expense. So yes, we did enter the bill when we purchased the noodle making equipment and made the purchase to the specific vendor. But in this case, all we were doing was trying to move that from the income to the expense to wash that out. I was recently told that one can use journal entries to help with fundraisers. Can you explain or provide an answer? Wow, I'm not sure. I'm not sure, Jeffrey, the technician, if they advised you to do that. Fundraisers. Boy, I mean, normally I would transfer a fundraiser over into a specific income account from the. I guess maybe what they're talking about is maybe putting fundraiser money into, again, similarly into a liability, much like you would see for your prepaid pledges, posting your fees or charges and expense, and then post a journal entry to debit the liability and credit it over to income for the amount of money that the church really receives as income. But I'm not sure. I would need to speak with the technician who you'd spoken with on that to see if I couldn't find out more information as to what their intention was behind it. I'm sorry. Again, folks, of course, once we're done here, there's a few things on this window that we want to make sure we're looking at. If I need to make a correction to a journal entry before I post it, I can, simply double click on it. It moves it back up to the top. I can make my desired changes, clicking Done, Add to Batch, or I can highlight it and click Edit at the bottom left. But let's say I realize, my transaction effect on my prepaid pledges it already has been dealt with. I made a mistake. I don't need to do this. I don't have to post this and reverse it. I can just highlight the $350 line and simply click Remove. And it'll say, are you sure you wish to completely delete this unposted transaction? I click yes, and it's gone from my batch. Okay? But I strongly advise, definitely more than probably any other transaction type, that if you're posting journal entries, please use the running balance window. It really allows you to ensure that you're choosing the proper accounts and see the actual effect of the adjusted balance of the account and the transaction effect before you post it. Yeah, you can correct it after you're done. But in this case, we want to try to avoid those if we can. If we can try to get it right the first time, that really helps, and that running balance window really does help with that. Also, if I'm not ready to post the batch, I can also save it. So if I click Save, Batch, you've got to get the dialog box that says Batch was saved successfully. So now if I close out of my, journal entry window, I could even exit out of Church Windows and Accounting, but then as soon as I come back into Other and Journal Entry, it brings me right back to where I left off with the batch and the transactions that I've entered saved. Okay? You can print the batch pre-posting if you wish. I always tell folks that it always asks you, as long as you've got it enabled, you can print the batch after you post too. But then, of course, when you're done with the transaction, when you're ready to, you would click Post from that point, immediately from that point. A lot of folks confuse that, save batch versus post. Folks, I don't need to save it first. If you're ready and you're not ready to leave the window, if you want to step away from the computer or close Church Windows or Accounting, definitely save it if you're not ready to post. But if you're ready to post, you don't have to save batch then post. You can just go ahead and simply click Post. Okay? So then once we clicked on Post, I should get the prompt. Oh, it didn't. So I have my prompt to print reports after posting transactions disabled. I can turn that on. But it will. If you go up to Special Functions, Settings, right here, always confirm and ask me about printing and posting, about printing after posting transactions. You want to make sure, folks, that is checked in order to be able to get that prompt. Yeah, the difference is that the transaction number is created after I post. So if I want the transaction number to be included on my transaction report, which is what I would want, I would hold off and print those after I post. All right, folks. So that's what we're here. We're about 30 seconds ahead of time schedule here. I'm done with what I'm talking about here. Please, if you have any other questions, you're welcome to type those into the questions portion of the webinar if you wish. Otherwise, if you've seen what you came to see, please, you can choose the file, exit, leave webinar prompt. A recording of this event will be on our website, on the YouTube channel, by this coming Friday, no later than 5 p.m. Eastern Time. All right, so let's see if folks are typing in some questions here. Recurring transactions, Jack, are basically, they are transactions which are set up and used and recurring, or can be used to reselect over and over and over again. We actually have had a webinar event on that topic, and I'm pretty sure we've got it on our YouTube channel. I would strongly recommend that you take a peek at that. Let me go back and see if I can find that for you. So if we go to yourchurchwindows.com, go to the search here, and we type in recurring. I think we've got one here. There it is. So right here under the YouTube channel, right here, version 18, which is the same. It's the same now as it was in version 18, accounting using recurring transactions. I'd recommend you take the 20 minutes and spend the 20 minutes and watch that event, that recording. But yeah, they're basically framework and structure of transactions that you can use to reselect over and over and over again. They're available in all kinds of transaction pages. Good, great question. All right, folks. Well, it seems like folks are kind of darting out fairly quickly here. I'm not seeing any other questions coming in. We appreciate you taking the 20 minutes out of your day to spend with us today. We hope the event has been helpful. And we've got lots of other upcoming webinars happening here, so please check out the free webinars page on our website. And we hope to see you at another Church Windows webinar event. All right. Thank you all so much. Take care. Have a good day. Bye-bye.